Hi friends, welcome to RV Academy. In my previous video, I told you what is partnership according to Partnership Act of 1932 and how to assess the partnership firm in the Income Tax Act of 1961. What are the essentials to claim certain deductions in the form of salaries, remuneration or salaries, interest on capital or commission, etc. Before I go to the format, first let me tell you how the partnership firm prepares the final account. Every partnership firm prepares the profit and loss account, profit and loss appropriation account at the end of the year to find out the profit to be appropriated among the partners. If the partnership deed provides for interest on capital, interest on drawings, remuneration to partners, it will be debited. Please recollect your memory which you did in the second PUC. Appropriation account, profit and loss appropriation account. On the debit side, we used to debit interest on capital. Suppose the partners allowed an interest on capital at the rate of 10%, 15%, 20% means on their capital we used to debit the amount to the partners or in the appropriation account. Similarly, if partners is allowed entitled to certain salaries like salaries for A, B, C, etc. partners per month so much, we multiply and debit to the appropriation account, and any commission, any partner is eligible for commission on the sales achieved by him, we used to debit. And finally, remaining profit whatever left out is to be appropriated among the partners or distributed among the partners according to their profit sharing ratio. But in the Income Tax Act, whatever he might have debited is not allowed entirely, which already I told you. If they prepared a partnership deed and submitted the returns along with the partnership deed, then the book profit has to be ascertained. How to ascertain? We have to recompute the profit. That is called book profit. We have to recompute. How to recompute? Just go through this format. First we take the net profit as per profit and loss account. Add all inadmissible expenses. Certain expenses are not related to his business. Such expenses are debited in the profit and loss account. So any such expenses should be added back to the profits. That is called inadmissible expenses. Inadmissible expenses, if any, should be added back to the profits. Whatever may be the rate given by the partners, interest on their capital. Suppose in the partnership deed, all partners are eligible to take 15% interest on their capital. Means 15% is charged, but income tax will never give exemption up to 15%. Interest on capital in excess of 12%, whatever is there, is to be added back to the profit. Up to 12% is allowed as a interest on capital. In excess of that, whatever is debited should be added back to the profit. Then remuneration to partners if debited to P&L, whether it is given to working partners or sleeping partners or whomever it is, we should add back the remuneration given as per the partnership deed. After that, minus the expenses which is allowable as a deduction but not debited in the P&L account. Now you can debit or deduct admissible expenses not debited to P&L earlier. Then all other incomes related to business. These two items, if any, should be deducted out of the profit so that we get the book profit. We have to follow this format. After finding out the book profit, remuneration to partners, remuneration to working partners. If he is aggressively involved into the activities of the business, he is called to be a working partner. Apart from contributing the capital, if he is also aggressively involved in the affairs of the business, then he is called to be a working partner. Only remuneration is allowed to working partners, not for the other partners. How it is allowed? If there is a loss of profit, 1,50,000 is the minimum. Suppose if profits are more, book profits are more, 90% of first 3 lakh rupee book profit or 1,50,000, whichever is higher should be taken here, and remaining book profit, 60% of remaining book profit should be taken here, and actual remuneration among these two, whichever is less, is to be minus. Then we get income from business or income from partnership firm. On this, 30% tax has to be paid. On this, I will work out some problems. Sri Ram and Raghuram are working partners in a professional firm which satisfies all conditions of section 184 and 40B of IT Act. They share profits and losses in the ratio of 4:1. Profit and loss account of the firm for the year ending 31/3/2019 is given. General expenses 68,500, interest on capital of partners 75,000, donation to NDF 25,000, salary, bonus and other remuneration to partners 2,85,000, depreciation 30,000, net profit 1,02,000. By gross profit 5,85,000. Other information, general expenses are to the extent of 18,500 is not deductible. Interest on capital to partners is in excess of 15,000. Depreciation allowable as per IT rules works out rupees 32,500. Compute the permissible amount of remuneration to partners. This is one kind of a problem. Here on the debit side you have all the expenses, whereby we have to find out which are the admissible expenses. Just recollect the things what I discussed earlier. All expenses related to business is admissible. Any expenses which is not related to business is inadmissible. Donations, charities paid, inadmissible. Provisions, inadmissible. Any interest on partners' capital in excess of 12% is inadmissible. All these should be kept in mind. Now, here the net profit is given as 1,02,000. Let us see how to compute this. Computation of income from partnership firm. Net profit you take 1,02,000. In the adjustment it is given general expenses to the extent of 18,500 is inadmissible. So that means authorities is not allowed this as an expenditure. We should add back to the profit. General expenses 18,500. Interest on capital in excess of 12%. It is already calculated and given in the problem. You can see the second adjustment. Interest on capitals to partners in excess is 15,000. It is directly given. Out of total interest on partners capital 75,000, 15,000 is in excess, that is in excess of 12%. It is already calculated and given. Directly you can write it here, 15,000. Any charities donation inadmissible, so add back to the profit 25,000. And whatever remuneration is paid to partners, whether it is working partners or sleeping partners, first you should add back to the profit. Remuneration to partners 2,85,000. In this case, all partners is working partners. Remuneration to partners 2,85,000. Depreciation charged by the partnership firm is 30,000, but according to income tax provision allowed 32,500. In the first instance, whatever charged by the partnership firm should be added back to the profit 30,000. When you take all these are inadmissibles. When you add up all this, 3,73,500. Total of these two comes to 4,75,500. Now, allowable expenditure, depreciation as per IT provision 32,500. So I have taken the provision as per IT 32,500. I added back whatever is charged by the business. Business is charged 2,500 less, whatever it is. First you add back depreciation charged by the partnership firm and then deduct as per IT provision. We get book profit 4,43,000. This is very easy to calculate. Now, how to find out the income from business? Very important thing, remuneration to partners. 4,43,000 is the total profit. Carefully observe. 4,43,000 is the total book profits on this up to 3 lakh rupees. First 3 lakh rupees book profit, 90% should be calculated. That means 3 lakhs. First you take 3 lakh rupees into 90%, it comes to 2 lakh 70,000. Remaining book profit, that means 4 lakh 43,000 is the book profit. Out of that, deduct 3 lakhs which already we calculated. First 3 lakh rupees. Remaining book profit is 1 lakh 43,000. On that 60%. When you add up these two, 60% of 1 lakh 43,000 comes to 85,800. When you add these two, 3 lakh 55,800 is the remuneration. But what is the actual remuneration charged by the business is 2 lakh 85,000. Remuneration allowed is 2 lakh 85,000. Among these two, whichever is least will be allowed as deduction. In these two, 2 lakh 85,000 is the least. So this is allowed as a remuneration. After 4 lakh 43 minus 2 lakh 85, whatever remains, that is called to be net income from business or partnership firm, 1 lakh 58,000. I will work out one more similar problem. Profit and loss account of ABC and Company for the year ended 31st of March 2019 is as follows. Firm of chartered accountants and satisfy all conditions of section 184 and 40 subsection B. Expenses 5,76,000. Depreciation 4,64,000. Remuneration to partners 5,50,000. Interest on capital to partners 1,10,000. Receipts from clients for tax advice 7,20,000. Audit fee 5,44,000. Net loss of 4,36,000 is given. Other information, out of expenses 1,14,500 is not deductible under section 36 and 37. Depreciation as per section 32 is 6,46,200. Interest on capital to partners not deductible under section 40 subsection B is 35,800. Find out the amount of net income of the firm for the assessment year 18 and 19. Just look at this problem. In this case, there is a net loss of 4,36,000 is given. Take the net loss as per profit and loss account. Add back all inadmissible expenses. In the problem, out of expenses 1,14,500 is not deductible under section 36 and 37. Inadmissible expenses identified is 1,14,500 by the authorities. This is not allowed. Add back to the profit 1,14,500. Then depreciation as per section 32 is 6,46,000. First instance, whatever depreciation charged in the partnership firm, I will add back to the profit. Depreciation as per P&L account is 4,64,000. Interest on partners' capital to partners not deductible under section 40 subsection B is 35,800. That is above 12% charge, and it is already calculated and given directly. You can write 35,800. That is in excess of 12%. Remuneration to partners, whatever given in the P&L account, just add back to the profit 5,50,000, so that we get total 1,64,300. 11,64,300 minus 4,36,000, because it is a net loss, you get 7,28,300. Now, allowable deductions, depreciation as per IT provision is 6,46,200. We deduct this. Add back depreciation charged by the firm, which already we have done, and deduct the depreciation as per IT provision 6,46,200. The remaining will be called as book profit. We got the book profit of 82,100. See here, when book profit is 182,100 or less than 3 lakh rupees, whatever it is, 90% of book profit, 82,100 into 90%, 73,890. The maximum remuneration allowed by the provision is 1,50,000. Among these two, whichever is higher, have taken 1,50,000 is higher. When book profit is less than 3 lakhs, then you can, whatever it is, whether it is loss or less than 3 lakhs, First provision is 90% of book profit or the maximum will be 1,50,000, whichever is higher should be taken into consideration. 90% of book profit comes to 73,890. The maximum remuneration allowed by the IT provision is 1,50,000. Among these two, whichever is higher, 1,50,000 is higher, that should be taken here. Actual remuneration is given, debited in the P&L is 5,50,000. Take that 5,50,000 here. Among these two, whichever is less, that is 1,50,000 is less, deduct. The remaining becomes net loss of the firm. There is no profit. 1,50,000 minus 82,100, 67,900 is the net loss of the firm. This is how you have to compute the income of the partnership firm. Please like, share and subscribe my video. Thank you.